Good morning, and thank you for joining Audit and Advisory Services webinar on procurement, fraud, and controls. My name is Sulesh Sharma, and I am an audit supervisor with Audit and Advisory Services. Co-presenting with me is Bill Secord, investigation coordinator with Audit and Advisory Services. As a housekeeping item, if you have any questions during the presentation, please feel free to use the Q&A function, and we will try to answer your questions at the end of our presentation. In the event that we don't get to your questions, we will post the answers to the fraud prevention website. This presentation is being recorded and will be posted on the fraud prevention website along with the PowerPoint presentation. With that, I will hand it over to Bill to begin the webinar.
Thank you, Sulesh. If you could forward the first slide. Thank you, everybody, for joining us today. As Sulesh said, my name is Bill Secord, and I'm the investigations coordinator assigned to Audit and Advisory Services. Today, well, first of all, thank you for joining us for our presentation. As an agenda today, we're going to discuss several types of procurement fraud and different fraud schemes that you might be exposed to here at UCSF in your role. We're going to talk about some effective internal controls to prevent and detect fraud. We'll discuss a few case studies of different things that have happened here at UCSF over the last few years. And we're going to finish up with some reporting, how to report fraud and different fraud resources, as well as policies and procedures pertaining to fraud. And please note that the training is being recorded and the copy would be available for you on the fraud prevention website. As far as objectives for today's presentation, we are hoping that you will get a general understanding of the types of procurement fraud and schemes that you might encounter in your job at UCSF, that you'll be confident in your ability to prevent and to detect fraud in whatever your role might be. And that you'll know where to go or what to do if you think that you've observed it. Just to expound on this a little bit, we have a large group of attendees here today, and we try to pick topics and areas of study that are as close and relevant to as many of you as possible. While some of the examples and types may not be exactly along your line and your role, please just take note of the overlap, because there are so many similarities in what we're going to be discussing, and then just think about how it might impact or might be germane to your role in what you might see at UCSF. Next slide, please. Just to start off, a quick little definition of procurement fraud from our friends at the National UK Fraud Authority. Procurement fraud is a deliberate deception intended to influence any stage of the procure to pay life cycle in order to make a financial gain or a loss. It could be perpetrated by external contractors or subcontractors, or internally by staff within the organization. And you might note that within UCSF, as many of you know, we're susceptible to both internal and external fraud. Losses could be either high value or low value in terms of dollars, or we could receive inferior goods and services, and certainly could cause reputational damage to us. Next slide. We'll start off with this type of fraud, just simply employees colluding with suppliers. Within this area, we could be talking about a bribe, which is giving or receiving of a thing of value to corruptly influence another person, most often used to influence the awarding of a contract in the pre-award process or during the execution of that contract post-award. A kickback is a bribe paid by a contractor to an insider after a contract is paid post-award. And then a corrupt payment, within this, we're talking about any benefit given or received with the intent to influence the recipient. Within this area, we might talk about cash, gifts such as travel and entertainment, loans, whether they're low interest or never paid back, use of credit cards, sexual favors, overpaying for purchases, and in some instances, we could be talking about hidden interests in other business transactions. We want to talk a little bit about some red flags that might show employees colluding with suppliers. Some of these red flags might be improper selection of a contractor, unjustified favoritism for a certain contractor, continued acceptance of higher priced and lower quality goods, unnecessary broker or middleman somehow involved in the transactions, or an official involved within the procurement accepts inappropriate gifts and has unexplained wealth. One of the types of frauds and schemes we want to talk about today is bid rigging. This is where suppliers collude amongst each other to limit competition and ensure that a particular bidder within their little group wins a contract. Bid rigging schemes may include some of the following: bid rotations, where a different member of the group or different company within the group takes turns winning a bid. Bid suppression, where members of the group actively work to suppress bids by others outside of the group. Again, this is in order to limit competition. Complementary bid, where members of the group just submit bids to make it look like there's even competition, but they're hoping that one of their members of the group wins based on a rotation scheme. Or phantom bidding, where different members of the group may actually go as far as sort of creating a fictitious company that we don't check up on and submit a bid, again, to make it look like more people are competing for our contracts. Some red flags for bid rigging might include some of the following: winning bid is too high compared to cost estimates, purchase price lists, similar jobs or industry averages and industry standards. And within this, we want to, I sort of want to include you guys who are experts in these fields. You're out there on a day-to-day basis and you're processing these kinds of contracts. You'll have a sense of who the players are, who's out there, and what prices are out there in the industry. There's standards or lists. There's other jobs at UCSF bids. So when you start seeing things that are sort of out of that norm, that might be a red flag. Another red flag might be rotation of winning bidders based on the job, the type of work, or the geographical area where the work takes place. Losing bidders are sometimes hired as subcontractors. That would certainly be a red flag. Unusual bid patterns, where bids are too high, too close, too consistent, too far apart when compared to similar projects. Again, I'm sort of calling on you guys who are in the field and do enough of these. Some of this, should jump out at you. Apparent connection between bidders, such as common addresses, common personnel, and common phone numbers. Acceptance of a late bid, or a change of bid after another bidder's price is known. Another type of fraud we want to talk about today is, or scheme. This is where it's called the excluding of qualified bidders. This is where insiders involved within the procurement process can facilitate the selection of a favored bidder by improperly excluding other qualified bidders, most often as a result of some kind of internal corruption. Red flags for this might include a significant number of qualified bidders fail to bid, The usual bidders stay away. Unreasonably narrow specifications for the contract and for the bids. Allowing an unreasonably short amount of time in which to submit bids. Adopting unreasonable pre-qualification standards and procedures. Failure to publicize the request, our UCSF's request for bids. Splitting purchases to avoid competitive bidding. And we'll talk about that more. And another thing we'll talk about more, which another red flag, is the unjustified sole source awarding. Next slide, please. Split purchases. This occurs when something that should be purchased in a single procurement is split into multiple purchase orders or multiple contracts, each below the threshold requiring upper level review or competitive bid limits. This is done to avoid scrutiny and done to avoid the mandatory competitive bid selection process. Red flags for this might include 2 or more similar procurements from the same supplier in amounts just under the threshold for review, unjustified separation of purchases for related things. For example, one contract for labor and one for materials, that when you combine them, they're over the limit. Sequential purchase orders or invoices just under the upper limit for review or competitive bid limits. Contracts that are under the competitive bid limit and then followed by change orders, putting them over. And just as a little sidebar here, these kinds of things can happen not just with large, hundreds of thousands, contracts in the, over $100,000. They can occur with things like bear buy, where supervisory approval is needed, or supervisory approval is not needed for things under $500. And again, it could also occur with the larger purchases over $100,000. And quite simply, this is all just done to avoid scrutiny or some kind of review. Next slide. Unjustified sole source awards, and Celeste will go into this a little bit later, but this is where someone involved in the procurement avoids the rules for competitive selection by making an improper sole source award to their favored or preferred contractor. This is done by citing special circumstances or otherwise manipulating the bid process. Red flags for this might include sole source award that is just below the competitive bid limit. Previously competitive procurements have all of a sudden become not competitive or non-competitive. Weak justification or weak documentation for non-competitive awards. Awards made below the competitive bid limits that are quickly followed by change orders that push them over that bid limit. And then also, the same person is involved in submitting or approving the justification. And just as a sidebar on this, while UCSF has a control in place to prevent the same person from submitting and approving justifications, where I think this is germane is if you have sole source awards that occur in consecutive years or over multiple years, where the same person either can submit or can approve that sole source award. Change order abuse. This is where a contractor alone or in collusion with an insider wins a contract by underbidding others. And then part of their scheme is to submit unjustified or inflated change orders to increase profits or extend the life of the contract and to otherwise avoid rebidding. Red flags for this, and again, while these are red flags individually, one of these or maybe 2 of these may not be a big deal, but if you start seeing 2 or 3 of these red flags, it might certainly be a signal that there's a problem. Red flags for change orders might include weak controls and procedures on the need for change orders, numerous, unusual, or even unexpected change orders submitted by a contractor and approved by the same employee, a pattern of low bid awards to the supplier, followed by change orders that increase the price and increase the scope of the contract or extended the contract period. Vague contract specifications or out of scope activities quickly followed by a change order, or incomplete or preliminary specifications that are subject to change orders based on later engineering studies. Another type of procurement fraud or scheme we want to talk about today is the leaking of bid information. This is where an employee leaks the bid information from other vendors, from other bidders, or confidential pre-bid information, thereby giving an unfair advantage to their favored or preferred bidder. Red flags for this might include poor controls on the bidding procedures, winning bid just under the next lowest bid, acceptance of late bids, the bid due date is extended unnecessarily, or all of a sudden the late bidder is now the lowest bidder. So all those may be red flags. Sorry, next slide. Next slide. Just something that's it has been an issue in the past with UCSF, conflict of interest. This is where someone in the procurement process selects a supplier to whom they are related, and they fail to disclose the existence of that relationship. Red flags for this might include apparent connections between the employee and the supplier, such as common addresses, common phone numbers. There's an improper selection of the contractor, and also unjustified favoritism for that certain contractor. And the last thing we want to touch on within this area is the purchase of personal use and purchase of personal use or resale. This is where an employee purchases items using university issued procurement card or P card or bear-buy requisition process that are intended for personal use or resale as part of their side business. And we'll have a good case study on this we'll talk about later, but red flags for this might include unusual or unexplained high volume purchases of products or services from a particular supplier, split or structured purchases that are done to avoid supervisory approval, which is that $500 limit we talked about earlier, purchased items that are returned to the vendor, but credit or a refund is not issued back to UCSF, and also purchased items that are delivered to a non-UCSF location. Any of those might be a red flag that you might have somebody involved in purchasing items for personal use. Next slide. At this point, I'm going to turn it over to Salesh to talk about some internal controls.
Thank you, Bill. As Bill discussed, there are many ways procurement fraud schemes can happen. The risks of these schemes from happening can be mitigated by implementing effective internal controls. Effective internal controls can help prevent, detect, and deter procurement fraud risks. In the following slides, I will be going over some of these controls. The first control that I want to touch upon is training and education, which is an easy and quick way to train employees about UCSF's procurement practices. This control can help prevent and deter procurement fraud. Both campus and health supply chain management have trainings available on their websites, which can be viewed at any time. The same is true for our suppliers. For example, create a supplier code of conduct and ensure that suppliers have read and acknowledged this code of conduct. Like anything, this is not a foolproof process. However, it informs employees and suppliers what is expected from them and consequences for not following UCSF's procurement policies and procedures, which may include termination or suppliers being put on the debarred list. The next control is separation or segregation of duties, which many of you may be familiar with. Ensure the duties are segregated and that the same individual doesn't have control over the entire purchasing process. This preventive control helps make sure that different people perform the following: approve purchases, receive ordered goods, approve invoice for payment, and lastly, review and reconcile financial records. Earlier, Bill talked about procurement fraud schemes related to unjustified sole source awards. In order to prevent this type of scheme, ensure that sole source procurement is adequately documented, reviewed, and approved. Verse 43, purchases of goods and services requires the completion of a source selection and price reasonableness justification form for all federally funded purchases, $10,000 or more, and non-federally funded purchases of $100,000 or more to substantiate the appropriateness of source selection and price reasonableness. If the procurement action is sole sourced, then as part of the documentation, the following needs to be provided. Price reasonableness. How is it determined that the price that you are paying is fair and reasonable? Sole source justification. Detail the unique circumstances and or specifications that make this the only supplier capable of meeting your requirements and why other suppliers were not considered. And lastly, conflict of interest attestation. As Bill talked about this earlier, this has been a problem in the past, and as part of this process, a conflict of interest attestation needs to be completed, which certifies that the purchase will not present a conflict of interest issue. System controls. Campus supply chain management uses thereby, and health supply chain management uses contracting procurement systems respectively. There are internal controls that are built within these procurement systems which help in preventing fraud, such as electronic purchase work order, whereby the purchase requisition is approved by someone else with the delegated authority. And automated systems also enable you to control access by assigning roles and delegated authority within the system. There is also automated three-way match between purchase order, receipt, and invoice to ensure payment for the same items which were purchased. Exceptions are flagged and reviewed by an exception handler. And lastly, an automated system provides complete visibility of spend data in one place and provides the ability for departments to run reports and kind of look at historical purchasing information, which is available at their fingertips at any time they want to run these kinds of reports. Some other controls to keep into mind include rotating job assignments. And rotating job assignments also discourages employees from engaging in long-term schemes to steal. Employees might realize that if they steal, then the next employee assigned to the position may discover the theft. Proactive data mining, as mentioned before, having an automated procurement systems makes it easy to extract data anytime and perform data analysis. Some procurement fraud schemes, which was discussed earlier, such as bid rigging, split purchases, and change order abuse can be identified through data mining. For example, looking at vendor trends for contracts awarded over a period of time. If a vendor keeps getting awarded contracts, then take a closer look at the vendor and determine why is that the case. Perform ongoing fraud risk assessment. Background checks is an interesting one. So doing background checks on vendors and contractors may provide insights about the vendors or contractors which we wouldn't know otherwise. For example, if through the background check you find that a vendor has going concerns or filed for bankruptcy, then you would not award the contract to that vendor or do further due diligence before awarding the contract to that vendor perform ongoing audits within the procurement cycle, and letting the vendors know that if they don't follow the policies and procedures, they will be put on a debarred list. And selecting an independent committee to review bids and make recommendations. This is critical to make sure that there's no conflict of interest, there's no awarding of bids to preferred suppliers that may have colluded with employees. The next control that is critical is performing monthly reconciliation. And as part of this process, just doing the reconciliation does not mean just signing off on the reconciliation, but performing deeper reviews. By that, I mean looking at the transactions and the supporting documentations that are attached as part of the reconciliation, which will make sure that the expenses or transactions are appropriate and for business purposes. Standardize your process, stick to your process, and do not skip steps within your process, no matter how busy you are. And lastly, trust your instincts and judgment. When you see something that seems off or odd, follow through, ask questions. If you don't know the answer, do not be afraid to bring it to someone's attention. With that, I will hand it over to Bill to go over some procurement fraud cases.
Thank you, Slash. And then just to touch on that last point, you know, you guys are the experts in what you see. And some of you have done hundreds, if not thousands of these contracts or processed payments and reviewed different things within the procurement process. Trust your instincts. You know who the players are. You probably have some pretty good idea about costs and how this should all go down. If you see something that's out of the ordinary or an outlier, trust your instincts. More often than not, you're probably right. Thank you, Slash. Next slide up to the, yeah. So the first case study I want to talk about today, I've called Too Many Roles. This is where an employee moonlights. So we had a UCSF employee moonlights with a UCSF vendor. The same employee was in a position to both approve contracts that were less than $100,000, and he also sat on the RFP evaluation committee for contracts over $100,000. He had the ability to split bids so we could approve those things under $100,000 without sending it to the RFP. And then when it did have to go on to an RFP evaluation process, he leaked the pre-bid information leading to the RFP being approved on the contract in favor of the vendor for whom he was moonlighting. The risk in this, obviously, is UCSF could receive an inferior product or inferior service. We could overpay for those products and services that would result in a financial loss. And then again, the reputational damage to UCSF for being associated with this kind of fraud. What did we learn after this episode? And how can we detect it and deter it? Multiple procurements from the same supplier in amounts just under $100,000 need to be reviewed. Somebody needs to take a deep dive into these and look at them and why are they so close to that $100,000 limit. Multiple procurements for similar services performed need to be reviewed. Why are we splitting contracts between goods and services and labor? And then in this particular case, no contracts or bids were awarded to other vendors for several years within that particular area. And that was a red flag that was missed. Next slide, please. The second case study I want to talk about today, I like to call flying under the radar. This is not a huge sophisticated scheme, but we had an employee who had authority to use their department's online account with Office Depot. The employee split purchases in amounts just under the $500 limit on the same or consecutive days. Again, this was done to alleviate or to do away with their supervisor approving the transactions. And the employee mixed personal items and personal goods with legitimate departmental needs on the same purchases, kind of mix it all in together. Items were shipped to and received by the same employee. So the same employee who put the order in would receive that order when it arrived to UCSF in a day or two. The department did not have a procedure to record the requests, to record the delivery or the receipt of the goods that were ultimately ordered. And the employee figured out that no one reviewed the transactions on an individual basis and simply just approved the monthly total at the end of the month. Risk here, thousands of dollars were stolen. And what we learned, same as with the first case study, the purchases were split just underneath that close to that threshold limit, in this case, $500. Closer review of the receipts or monthly records would have detected this. And as a result, the department implemented the use of a logbook to record each step of their procurement process. And ultimately, they decided to start looking at receipts on a weekly basis as opposed to monthly. Next slide.
All right. I think before I jump into the next slide, I just wanted to reiterate what Bill has said. And on this particular example, there is also segregation of duties issue because the items were shipped and received by the same employee. So having segregation of duty is really important. And to my earlier point where I talked about monthly reconciliation, again, not just signing off on the number, but looking at the details that are attached with the supporting documentation to make sure that the supporting documentations make sense and those expenses are for business purposes. On this next slide, we have listed names of individuals you can contact to report any suspected or actual fraud. Bill, who is co-presenting with me today, can be reached at the number on your screen. Irene Magdalene, she is the Chief Audit Officer with Audit and Advisory Services, and you can contact Irene if you suspect or know of any actual fraud. If you want to remain anonymous, you can use the whistleblower hotline or go on UCORP website. In addition to this, you can always visit our fraud prevention website. The address is fraudprevention.ucsf.edu. There are some useful resources on this website, such as tips on how to prevent and detect fraud, FAQs, copies of webinars such as this. So Audit and Advisory Services does a couple of mini webinars throughout the year for different areas, for example, cash, and now we're doing procurement. So you can find those on our fraud website. And then fraud prevention checklist. So it's a checklist that is available for departments to use for doing self-fraud risk assessments. And on this slide, we have listed some policies and laws that are applicable, some UC policies and laws. I won't go over in detail for each of these policy, but BUS 43, conflict of interest, internal controls, I think those are very relevant to procurement. So if you're not familiar with these policies, take a look. They're available on supply chain management website and can be easily accessible via UCSF website as well. This concludes our presentation, and we'll answer questions that you may have. And I see that there are some questions in the Q&A. Okay, so one of the questions is, does potential exist for red flags to be present in which no corruption exists? In other words, does a red flag necessarily warrant corruption? The answer to that is no. So red flags does not necessarily mean that there is corruption, but it's something to look out for. For example, if there is a vendor who gets awarded contracts multiple times or over every year, it still may be okay, but taking an extra look at that to make sure that there's nothing that is corrupt going on, or there's no fraud or something fishy going on. So so the answer to the question is no. Red flags necessarily does not always mean corruption, but it's always good to take another look and kind of like follow through to make sure that nothing is wrong or no one is trying to bypass the internal controls.
And Celeste, I could just jump in here. If
Sure.
You know, as I said earlier, one of the red flags may not be a big deal, and sometimes there's certainly human error involved when we're processing as many contracts and purchase orders and things that we do at this huge institution. But if you start seeing multiple red flags, I think your ears should start perking up and start asking questions, and you know, take a dive into these things and look and look at why some of these things were approved. Again, maybe one red flag, two red flags, maybe not that big of a deal. But when you start getting multiple instances, you might want to start looking out for things.
One of the other questions that has come in is, what is the sole source bidding threshold that mandates competitive bidding? So according to the policy, for non-federally funded purchases, anything that is 100,000 or more needs to go through competitive bidding, and for federally funded purchases, 10,000 or more needs to go through competitive bidding. Will the slide be shared after the presentation? Yes, the slide as well as the recording of today's presentation will be available on our fraud prevention website, as well as other past presentations that we have done is available on that website as well. There is a question, or there is someone is asking about how to report. So as of a suspected fraudulent activity. So as
call me or look up my email, and I'm happy to treat you as anonymous. My number is on the screen there. 415-514-0439. I'm in the directory. I'm happy to just talk to anybody about what they've experienced. We can keep it anonymous if you'd like.
Yeah, so I think if you could contact Bill or use the anonymous hotline that was discussed earlier, or go on our fraud prevention website to kind of see what other channels you have available to report this. We would be more than happy to talk to you about that and take it offline. The next question that we have is that, how can UCSF employees protect themselves from appearance of a conflict of interest if they're involved in the selection of a vendor that they have a personal relationship with and not a family member? It's not a family member, but they have a relationship. So I think the best thing is to do is be upfront about that and let your management know about your relationship with the vendor. So, and let them decide whether you should be part of the procurement process or not. So in any time where you have a relationship with a vendor, even if it's not a family member, do let your supervisor or someone in management know before you engage in the procurement process, so that they can make the determination whether there is a conflict or not, and whether you should or should not be involved as part of the procurement process.
Yes, always be upfront about it.
I think we are up on time, and there's one last question that I'll get to. If I use a larger vendor, such as VWR or Fisher, instead of making a non-catalog direct order with the manufacturer, is that acceptable? Oftentimes, a larger company will offer free shipping or easier negotiations if something happens down the road. I would say that if you use a larger vendor, I would contact supply chain management to make sure that that is appropriate. And if we have a master agreement with one like larger vendors, because for the most part, UCOP or UCSF has master contracts with large vendors. So I would go that route and kind of follow up with supply chain management before going directly and placing a direct order with the manufacturer. All right. Thank you everyone for attending the webinar. And as mentioned earlier, a recording of this webinar plus the PowerPoint presentation will be available on the fraud prevention website. Please, if you have any more questions, do not hesitate to reach out to either Bill or me. And our contact details will be posted on the fraud prevention website. Thank you very much.
Thank you, everybody.